really some very big milestone. And when we talk about the various milestones, let me tell you, there are quite a few achievements which we have been able to do today. One, we have sold on a slump sale basis the FMCG business, which was managed at the Raymond Consumer Care Limited, for a value of 2,825 crores. That is very significant if I take based on the revenue.
Still keep quiet there, please. There's too much noise, the people talking.
Based on the revenue, it is more than, of FY22, more than 5x of revenues and a significant value in terms of achievement. This would keep, since it is a slump sale, we are keeping the manufacturing facility of the condoms at Aurangabad with us, which will continue to do B2B business in India and overseas, and also supply to Godrej consumer, who is the buyer on the slump sale basis. As RCCL is getting significant amount of cash and liquidity, we have taken a large corporate initiative which is critical for the success and the future growth of the company. That is, we are demerging the lifestyle business, which includes branded textiles, which is branded shirting, suitings, branded apparel, garmenting business, retail, MTM, all those businesses gets demerged from Raymond Limited into Raymond our Consumer Care Limited, which is the RCCL business, along with the debt. So the gross debt at the lifestyle business is close to 2,000 crores as on 31st of December, which will get transferred along with all the assets and liabilities, thereby making lifestyle business complete net debt free. As you know, it is very important to say that Raymond being a listed entity, and since the significant part of the business of Raymond Limited is being demerged, Raymond Consumer Care shareholders will also get the shares, Raymond Limited shareholders will get the shares of Raymond Consumer Care, and thereby making it as a listed entity. So what we will achieve, that lifestyle business will become a pure play listed entity with zero debt, and it is poised for a significant growth in the future. Raymond Consumer was majority owned by the promoter entity and jointly owned by the promoter entity as well as Raymond Limited. Promoter had the ability to take out the money, but his commitment is towards the business, and therefore he is putting the entire money back into the Raymond Consumer Care Limited lifestyle business, ensuring that it becomes a net debt free. Therefore, it reflects that whenever the promoter has made a monetization of asset, he has contributed back into the business, which is seen reflect in the last 4 years is close to 1,400 crores has been invested. And the Raymond Limited, which will have primarily the real estate business and investments into the engineering business as well as the denim business, will continue to run the business. That part of the business, as we all know, was always having a net debt free and having a cash. So therefore, by this, what we have been able to achieve, we will have 2 listed entities out of the group with pure play net debt free, one focused on lifestyle business, which is a B2C business, and the other one is a real estate business. So that is the broad achievements the company has been able to deliver. We'll be more than happy to take the questions.
Thank you, sir, and congratulations on this announcement. I just want to understand a couple of things. As far as sale of the consumer care business is concerned, how much of the proceeds would come into Raymond, because of course one of the owners of that company was Raymond itself. Second part, do you have for the balance shareholding, is there any intention to sort of let go of that stake as well going forward? Second thing that I wanted to understand, is there any more further restructuring then left after this particular announcement at the group level itself? Because I think that will be left with
So 3 clarifications. First point, the value of FMCG sale comes to RCCL, Raymond Consumer Care Limited. What we are doing is we are demerging the lifestyle business with the debt into RCCL. So therefore there is no need, the money needs to go from RCCL to anywhere else. Over a 12-year month period, through the NCLT process, a demerger will happen. Interim, we will take the money, that is a different story. But on a sustained basis, the money which is there at the RCCL will knock off the debt at the Raymond lifestyle business. So that's point number 1. Second thing, as far as restructuring, so I would call it, this is an initiative which we had always mentioned that we will create a pure play businesses, and we had also stated with our demonstrated performance of being a net debt free company that consistently we have been reducing the debt. We all know from a 2400 crores to a 930 crores of debt which we delivered. We have achieved the journey of being a net debt free, which we said over the next 2 years sooner than later. So to that extent, our intent has been completely demonstrated, and we had always mentioned that once we are a debt free company, we will take an initiative in order to become a pure play listed entities. So you will have Raymond Consumer Care, which is possibly will be named later, will be a lifestyle company with a pure play, Raymond Limited, again a large pure play on the real estate business, with obviously the investments into the engineering and the denim business.
Right, Mr. Hajipur from CNBC. What's the timeline that we're looking at with respect to listing Raymond Consumer Care? And I just clarify what you just said. You looking at renaming it, or is that, will it continue to be Raymond Consumer Care?
So, number 1, it is an NCLT process which would take anything between 12 to 15 months. We will have to go through the regulatory process. So that's the timeline which we are looking at. And obviously at some point of time during this process, once the company gets listed, we will be changing the name.
And also with respect to the sale to GCPL, now from the brands that are going, Park Avenue, also the FMCG bit is going. Now I want to understand how will that work, because you already also have Park Avenue in the branded textile space. That would be an overlap. I would assume that a licensing agreement would work better. So just run us through how that.
Sure. Good point. Actually, the way the trademarks are considered, it is a registration of a certain class or certain chapters which are prevalent in the Indian context. So you have got for the personal care, home care trademarks which are registered under the name of Park Avenue. That gets transferred to GCPL. All the rest remains with us. And we are also able to start the FMCG business under the Raymond brand on a go-forward basis. So that's the way we are looking at it.
And just to add to what Amit said, we are strong in the premium apparel space, and they are strong in the FMCG space. The more they grow the FMCG business, so if they sell, say, from 1 million cans to 2 million cans to 3 million cans, that's great publicity for the Park Avenue brand under apparel. And the more apparel we sell, the better it is for them. So I think it's a good win-win situation where we have created, where the ownership of the brand might be in 2 different people, but they're in 2 different categories, and both are specialized in their categories.
Right, no, my understanding was just the confusion, right? Because it's one brand with 2 different companies.
So what? Well, even if you license it to somebody for 20 years, here it's the same thing.
Okay, fair.
Here I'm getting the money up front, which is helping me to unlock value in the company and creating 2 pure play companies, which will be the real estate company and the lifestyle company. And when I'm able to do that, I'm unlocking significant shareholder value.
Right. And also you're looking to keep the manufacturing.
Sorry, there's some questions here.
Yes.
Go ahead. I'll come to you.
So manufacturing,
So what is the promoter contribution to the lifestyle and real estate?
So 100% of my equity holding in the consumer company, I am leaving back in the company. I'm not taking a single rupee out of it. So my 50% of the sale proceeds will stay in Raymond Consumer Care, and as a promoter, I am putting 100% of my sale proceed back into the business.
So you're putting it back into the lifestyle and the real estate business.
Absolutely. And which is a very strong statement to show my commitment and belief in what the company will do.
Right, so sorry, if I can just take the question on the manufacturing. You're keeping the manufacturing unit. I just wanted to understand, since you want to continue that, and that you said would be on the B2B front, how big is your B2B part of that business that you would want to keep the manufacturing facility, and how much of a value add will that be for you going forward?
So it's a small manufacturing facility. So we will continue to supply to GCPL for the Kama Sutra brands under their brand name, and we have some of the customers in the domestic market and some overseas market which we will supply. It's not a very large business. We don't want to go out and split those numbers. These are some confidential numbers which we would like to keep it with us.
Sorry, there's a question there. I'll come to
Can
you.
you
One
speak
minute.
little
Two
louder?
questions. I have two questions. With demergers and by selling the consumer care brand, how would the shareholders be benefited from it? And the second one is like interest rates and the inflation. How is it affecting the realty business? And are we going to hear some new launches in upcoming years?
So, two things. One, as far as the shareholder benefit is concerned, this is very important to have a pure play businesses, which is very important for the investors. An investor of consumer side does not generally like to invest in a reality or a conglomerate. So therefore that is very, very important to show a pure play business, which we have achieved. Second thing, by making a net debt free company, you take away all the possible vulnerabilities of a business. So that is adding to the shareholder value creation. As far as the second leg of your question, see, at this juncture, we will be announcing our results in a short period of time. You have seen our performance, that one after the other, the launches which we have made in the real estate has done a very good performance. You have seen what we did with the first project, the second project, and the third project which we launched. I cannot go beyond this in terms of telling you the numbers and anything. And if you have a unique product which can sell well with the right configuration, demonstrated performance, you are selling well.
I think there's a question here. Sorry, cannot hear you.
Yeah.
You have the mic.
Can you just speak up a bit?
Godrej continue to give selling at the Kama Sutra brand?
Yes.
Then what will you, when you are selling to B2B brands, what will be the value for you?
No,
No,
B2B,
B2B is from us to Godrej. We will make the product. Sorry? We will export and sell to Godrej.
yes.
But when we sell B2B, it's in their brand name. It's not our brand name. It's a business.
And how big is the Kama Sutra brand?
Sorry?
How big is the Kama Sutra brand in terms of
Kama sales kitna hai Kama Sutra?
See, I don't want to
It's
get
in
into
the quiet period now, so we don't discuss
so
the
the numbers.
And I mean, you spoke about the debt being, is it 2,000 crore debt you will pay back or 930 crore?
No, no.
What
So
is the debt?
Gross
debt.
Gross debt is 2,000.
we talked about gross debt.
And
to-
debt is 930.
Yeah, the 31st December, 930 crore was the debt.
31st December.
Can I quickly ask a question? There were reports which suggested that last year you were in talks with another group for the same business. That time the valuation was assumed to be about 2,500 crore rupees. Now in a year when we've seen the valuations of FMCG companies also come down, you sort of went ahead and added 300 crore as far as the value itself is concerned. Would you help us understand, maybe throw some light on how the valuation matrix?
Look, at the Raymond Group, we believe very strongly in managing and nurturing our business. And in our demonstrated performance, every single business, we have demonstrated growth, margin improvement, and that reflects in the value creation of our business. And
Would you say it's a good deal for Godrej consumer or good deal for you?
Let me tell you something. Nobody does a deal if it's not good for him. Okay? You must look at a win-win. 100 rupees in your hand has a different value than 100 rupees in my hand. Should I have got 300 crores more? Yes, I could have got 300 crores more. But by getting 300 crores less and getting the deal done, see what I will achieve on the the demerger. If I get that done, I won't make 300, I'll make 500 crores more. From their point of view, you might think they have overpaid, but they are smart business people. They know what the potential is. Sometimes you don't pay for the product, you pay for the potential. And if they just take it and plug it into their system, they have a growth plan. And they're very smart people, they've done extremely well, I know them extremely well. So I think this is genuinely and I passionately say, genuinely a fantastic win-win deal.
And some timeline on the IPO for RCCL?
Sorry?
Is it timeline for the IPO for the...
So there is no IPO. What will happen is the demerger process will ensure that it is, it gets
The
listed.
demerger will take 12
to
months
14
and
months.
then it will get listed.
And what is up with the JKFS IPO you were planning?
Sorry?
JKFS IPO.
That is not happening just now.
That should come.
Could you help us understand with the demerger on your financials, what could be the kind of value that moves out in terms of
So as of now, obviously, as I said, we are on a period where we have in week to 10 days results to come out. So we will not get into the specific what will go out, what value. That's not appropriate for me to speak. But you all know, as I explained, branded textiles, branded apparel, garmenting, MTM, everything moves as a lifestyle business into the RCCL.
So Raymond continues as a pure play. So the focus for Raymond Limited will entirely be real estate. And then you said that with investments in engineering and the denim, those are as subsidiaries of Raymond.
Okay.
Absolutely.
Yes,
And at the right time, you'll see there's too much to do. We wanted to get the big elephant out of the room.
of course.
And I think for years the investors have said, when will you deleverage, when will you...
Yeah.
So two things we've been hearing. When will you deleverage and when will you demerge? These are the two things we have heard.
Yeah.
One, after this we will be zero debt and cash surplus. Number two, we will have demerged. I think two very big things you take over today. Three, you take over debt free, and the very important thing that the promoter is putting 100% of the money is due to him into the company to help in the demerger.
तो आखिर में प्रमोटर को क्या मिलेगा?
Promoter को क्या मिलेगा? Long term. See, I am in the business of value creation. I have taken a bet that my business will do well. Most people would take that money and put it away. I have put it back into my business to say I want to grow this business, I believe in this business, and I am putting my hard-earned money into this business. It's a very important sign.
And to build on that, I mean, Raymond is a 100-year-old brand.
Yeah.
It's built over 100 years, decades of people building brands. And this is now the next journey.
So today, we are actually announcing 4 things: the sale of a business, debt-free, demerger, and promoter putting 100% money back in. So it's a very significant day in the history of this organization.
And it is not the one time. In the past, in 2019, when the promoter entity sold the land, at that point of time also the money generated of the sale proceeds of land was again put into the company. So that is it has become a history that the promoter and asset monetization comes back into the business because he believes in the business of the growth.
And I also believe my returns will be better in my business than outside. So it's simple.
Hi, Sriram from Reuters. The timing of the deal is also interesting because it's broadly in somewhat slow M&A markets in both India and globally. Given that demerging is something that investors have asked you for a long time, you could have done it earlier, you could have done it a bit later as well. Was there a thought to push this out even a little further, maybe
Push
out this demerger a little further, maybe when you get a better valuation or when markets are better? I mean, it's a good deal irrespective, but was there that rationale of could we do this later?
Could we do what later?
No, I think two
Basically
things.
selling the business.
See,
One,
opportunity waits for nobody. You can always say, should I have done it 6 months earlier? Should I have done it 12 months later? I believe in one simple philosophy. You know, I tell you, 25 years ago when we sold the cement business, they said you sold it cheaper. It suited my purpose then. Today, the price that I get helps me achieve a much larger objective of demerger and getting debt free today. Two very, very important things for me. And with one bird, with one stone, I've killed three birds. I mean, it is if you actually go home and think about what we have done today, it is historic. And it is path-breaking at some level.
What will be the value of RCCL post-demerger?
What will be?
The value. What is the value that you have?
What will be the value?
See, the value at which it goes is based on a valuation report. Now, obviously, what would be the value at that point of time when it gets listed is the market forces will define the value.
Second, currently what is the valuation of RCCL with the business that is going on?
No, but the business which is going out, we sold it for 2,825 crores. So that is the value of the business which has been sold. So it is, somebody paid that value. So therefore, I would consider that is the value.
For the 1,400 crore rupees, can you give us a sense about the breakup?
1,400?
This promoter investment. 1,400 crore rupees. Promoters should have invested 1,400.
Yeah.
Can you give me a sense of the breakup about how much is going to lifestyle and to real estate?
No. So actually, we have to understand the 1,400 crore is a sum of two promoter contributions into the business. The first one of 350 crore was done in 2019 when the land of the promoter sold. The second is this, which is 1,000 plus crores, which is the promoter share on the sale of FMCG, which again goes back into the lifestyle business. So to that extent is this 1,400 crores. So there is, you cannot define whether this is a business, the 350 crore what we put in 2019 was relating to lifestyle or for the reality business. It was Raymond Limited.
And you also spoke about the 100% promoter contribution. I mean, can you give an idea about that?
100% promoter contribution means whatever share of the promoter on the sale proceeds, 100% of that proceeds has gone into the business. It is not 100% the value because the promoter held only 49%. So he, whatever the value coming out of the 49% has been put into the lifestyle business in RCCL.
Thank you.
Done? Any other questions? Or okay?
Yeah.
Thank you very much.
Thank you.
Thank you for coming.
Thank you.
Thank you.
Good afternoon. A very warm welcome to all of you. Namaste to the panel. It's a wonderful panel, a power-packed panel, and we'll see more such stalwarts from Indian industry through the rest of the evening. But this panel represents, between them, several hundred years of experience in doing very complex industrial projects. One of the youngest companies here does such fantastic stuff, very high, high science in some ways, in the business of refractories. And that's why the composition of the panel is great to discuss that first question that I'm going to throw. Pravir, I'll start with you, Mr. Sinha, as one of India's largest integrated power companies. The fact that this is India's moment has been said for years now. And also the fact that the world is India's oyster, particularly after COVID and particularly after what has happened in China. Beyond the numbers and the bottom line which drives you, how would you respond and tell our audience here how is India the world's oyster?
Thank you, Siddharth. Thank you, Mr. Puri. Thank you, India Today Group, for the opportunity, and good afternoon to everyone. I come from one of the oldest companies. We are just 108 years old, but we are very young in heart in terms of what we want to do and how India can play a important role in the change, especially in terms of sustainability, clean energy, and I come from that field. But Siddharth, you rightly mentioned that post-COVID and post the geopolitical situation which is there, this is India's decade, this is India's possibly the century also, with a huge population, 1.4 billion. I think we have a great workforce over here. And it's not only the workforce which is there, but also the consumers which are there. And this is aspiring India. This is India where our young people are aspiring. They see every day on the TV, they see on their mobile phones what's happening globally and how they have missed out in many of the opportunities that they could have participated. And I think what we have seen, how India could come back very quickly after COVID. The Indian people went through very difficult times, but it was March, April, many of them walked home hundreds of kilometers, but came back, and the resilience that has been demonstrated by Indians really shows that India and Indians can do anything, anywhere in the globe. And I think that's the adaptability of the Indian people. In terms of economic metrics that you see, everything has been right. India continues to be the highest growing in terms of GDP. It's the fifth largest in terms of economy, third in terms of purchasing power parity. So I think all the right things are happening in India in spite of the conflict in Europe and in especially Russia and Ukraine. We have been to a very large extent insulated by the changes over there. We've been able to handle and manage, and the Indian government has been very, very proactive on this. So I think the Indian economy will really grow very fast, while there are certain things which are given.
Right.
The 6%, 7% is a given thing in India. The aspiration is how do we make it in double digit, and I expect that with the type of changes that is happening in the economy and the opportunity, and India leading globally in the G20, we will definitely get into the double digit sooner than later.
Great point to start off. Sajjanji, I'm coming to you, and many in the audience would relate to your brand and your company because wood is expensive, it is scarce. बहुत सारे हमारे जंगल भी कट चुके हैं. But plywood is what really helps the average Indian add to his home. Of course, you can't just make a home out of plywood unless you have done some innovation. But tell us, do you see in the industry that you have built up over so many decades, India being a competitor to China and in fact being an alternative destination for both investments and technology?
Thank you, Siddharth. So, when you referred plywood, so I will start with this only. Around it was 1993, that time all of a sudden we saw that there was huge demand from China, and then plywood from all over India was moving towards China. There was 50% increase in the domestic price in a span of 3 months. And then not only from India, from all over the world, things were moving to China because there was housing revolution taking place in China. The government's policy that everybody should have a house. So, and then onward, China endeavored in augmenting their capacity, and very soon, China increased their capacity almost 50 folds. And in a span of 30 years, China has become self-sufficient in plywood, not only in plywood, in the plantation timber also, which is the base of all the panel in the world. And I will give you comparison. at the moment, our plywood production is 10 million cubic meters.
10 million cubic
10
meters.
million